October. Welcome to another edition of Monday Market Picks. My name is Tilan Wickramasinghe. I'm the head of research for Maybank Securities here in Singapore. The Asian markets are starting in the green after some stronger than expected US payroll data coming out last weekend with optimism on a US soft landing. Chinese stocks are also rising after coming back from the Golden Week holiday with expectation of more stimulus to come, especially with the big press announcement that is supposed to happen tomorrow. Now, there is some skepticism that these rallies can continue at this sort of current strength going forward. So today's show, we are dedicating more to stocks and markets that have actually been performing under the radar and not actually been getting the headlines that they deserve. We think there are some very interesting opportunities in these markets. So joining us first today is Kerwin Sisayan, who is the head of research for Maybank in the Philippines. He says that the rally in the Philippines market, which hit a 52-week high, can continue. So we're going to wait and hear from him. We also have Bunyakon, who thinks that the recent performance of airports of Thailand can continue, and we've actually raised our target price there. And we also do a very special experiment with some ESG stocks in Singapore, and we'll give you the results of that very interesting experiment as well. And as always, we've got Amirul, our chart guy, joining us, and he's got two great stock calls as well. So do stay till the end. So now let's get to Kerwin without further ado. Kerwin, welcome to the show. Great to see you. Now, Kerwin, the PSE index has hit a one-year high last month. Can you catch us up on what's been happening in this market and what's actually been driving this rally?
Hi, Dylan, and thanks for that, and thanks for having me on your show. Well, as you mentioned, that the Philippine market has been rallying quite significantly for the past few weeks. Actually, just up again, or close to 2% today, reaching another 52-week high. So the big reason behind this is that the improving macro picture for Philippines, because we've been hit a lot in terms of high inflation, high interest rate. Actually, if you look in the region, Philippines is one of the biggest in terms of rate hikes that we've seen the past 2 years. So the rate cut that we've seen from the central bank 2 months ago or in August was a big decisive factor for the markets to rally for the Philippines. It also helped that the inflation has come off quite significantly. So, for example, we've seen inflation peaked at around 8% 2 years ago. Now it's down to 1.9%. As of end September. So we've seen a lot of down trading. We've seen a lot of consumer sentiment quite very negative for the past couple of years. Now that has been turning around with easing inflation and easing food prices, in very particular, because food is very important for Philippines. It's a big portion of the consumption for Filipinos as an emerging market. It's about 10% of our CPI basket. Now that has been coming off by around 5%. So inflation has been really dropping. So we're hoping that this will sustain the rally for us. So both on the inflation and interest rate front.
Right. So, I mean, you are coming out and saying that the rally can really sustain. So what are some of the catalysts that we should be looking for?
Sure. So one thing is that we're expecting more policy rate cuts from the central bank. So we've hiked about 450 base points for the past 2 years. We've only cut just 25. So we're expecting another 100 to 125 cuts in the next 12 to 18 months. So that's one of the big macro rally that we're expecting as a catalyst for the market. Second is that we're expecting some still very strong consumer spending that could drive corporate earnings growth. So typically for Philippines, Christmas or holiday spending is very strong. So that's in the fourth quarter. And that comes in a very good time because if inflation is easing quite significantly, then you have a very strong spending quarter in the fourth quarter. Then you add the election spending in the following half or the first half of 2025. then we see a lot of growth potential in the next 2 to 3 quarters. So I think that's big catalyst for the consumer sector in the near term.
Great. So quite a few catalysts. So, but Kerwin, how do we play this? What do we buy?
Sure. So we have our top picks. So we call them as Magic 8, and we are mostly geared towards the consumer sector. So if I can share, so there we go. So we like Jollibee. So Jollibee, as you know, is one of the biggest consumer companies in the Philippines with Chicken Joy and everything. So as long as consumption continues to rally, then we have Jollibee as a big beneficiary of the consumption spending in the Philippines. And at the same time, we like SM stock. So SM is a conglomerate with your retail, so your department stores with your food and beverage as well. And of course, also it owns the biggest mall operator in the Philippines. So malls will benefit, of course, on the consumption spending again that we could see in the next 2 to 3 quarters. And lastly, we also like Ayala Land as the main beneficiary of your policy cut rates, because residential has been quite laggard, for example, for the Philippines because of the high mortgage rates, high interest rate environment. If we see 150 bips cuts, then they're the clear beneficiary for this one.
Got it. So Magic 8 for some magic upside. So do watch out for that. Kerwin's more detailed report is in our weekly newsletter today. Look at the ASEAN bi-weekly and you'll find it there. Thanks, Kerwin, for joining us.
Thanks, Dylan.
Okay, so let's now go to Thailand and to the airports of Thailand. We've got Bunyakorn on the line. Bunyakorn, you've upgraded the target price to from 71 baht to 75 baht for AOT. Can you take us through your thinking?
Hi all, thanks for having me. So the target price for AOT is really based on the valuation for financial year 2025 year end. So it's just the lower forward and much better improvement in free cash flow position from a higher passenger service charge and concession revenue. So the stock is typically perform well in the second half of the year due to upcoming high season. So that's the case of our upgrade of the target price.
Got it. Now, so Bunyakorn, when I was actually reading your report, one of the things that I saw was this big capex cycle that's coming up. So can you give us a little bit of color on that? I think for the Bangkok airport, the 10-year master plan is set to be finalized by February 2025. And what does that entail? And there's also some plans for some more capex in other airports as well. Can you bring us up to date on what's happening there?
So the overcapacity issue since the peak COVID, especially the peak season, caused them to think about the long-term master plan, which will include the airport terminal expansion and even the new airport in the key tourist destination, such as Chiang Mai and Phuket. So let's talk about the new terminal expansion. It's mainly at the Suvarnabhumi Airport, we call short form BKK. The current capacity is about 60 million, and which we expect to be fully filled by 2027. So the new South Terminal, which is the will accommodate to 70 million, which is more than double from the current capacity. That one will cost about 120 billions baht, Thai baht. So the new terminal will come with a fourth runway, will cost another 20 billions Thai baht. So overall for Suvarnabhumi expansion, in the master plan we will have the capex of total about 140 billion. So that upcoming project other that is still on study is for Chiang Mai and Phuket, that will be about 80 billion each. That will be in study and should be announced by next year.
Right. And can all this capex growth be justified with passenger growth? Do you think that the arrivals into Thailand will be quite strong going forward?
So our projection of the passenger is in long term is about 7% compound annual growth rate 2020 2035 from this year. So I think it's in line with our forecast from airport Council International. I think it's the research from the international research. So at least about 90 million passenger on top of current now it's about 120 million. So it's almost double. So we expect the current capacity with current expansion plan, not include them in the master plan to be filled by 2030. So at least they need a new terminal to fill the demand in the upcoming long term years. Yeah.
Got it. Got it. Okay, that's great. Thanks, Bunyakon. For Singapore investors, do note that AOT has a deposit receipt on the SGX, so you can actually directly trade AOT on the SGX as well. So that was Bunyakon, who's just upgraded his target price on AOT. Now, just staying on Thailand and also staying on depository receipts, I just want to make a quick note on PTEP, PTTP, where the target price has been actually cut by Chuck, who covers the stock, to 158 baht from 179 baht. The primary assumption change has been a cut in oil prices in 2025, where he actually expects oil prices to fall a lot more than what he initially expected, to around $70 a barrel versus $75 a barrel, because he thinks that OPEC potentially will actually slow their output cuts going into next year. But having said that, the rest of the fundamentals are pretty much intact, and he's keeping his buy call very much on cheap valuations, about 7 to 8 times PE, as well as dividend yields of around 6 to 7%. As I said, again, PTEP is a SGX DR stock as well, so do have a look at that. Now it's time to bring Amirul, our chart guy. Amirul, welcome to the show.
Hello, Dylan. Thanks for having me.
And what have you got for us today, Amirul?
All right, so Dylan, today I'm going to share with you guys two interesting charts actually. So let me share with you guys my screen first. All right, so the first chart we have here today is Food Empire. So we actually made a buy recommendation for this stock for a few reasons. The first one is because this stock actually made a bullish breakout. Because if you see from this pricing, you might see that it is actually making a sideways range. But for me personally, it's actually making a bullish breakout, because if I draw like this line over here, another line down here, this actually seems like a bullish ascending triangle breakout. And within this ascending triangle breakout, even though you see like it's making a sideways movement, it's actually making a classical upward trend, which is a higher lows movement. So if I draw this one around here, then another one around here, and last one around here, you could see that it's actually making a bullish breakout and a higher low structure. And we actually recommended this because it made actually a bullish breakout around this price. And then as you can see, this morning, it actually gap up and almost reached our first resistance level, which is at around 1.10. So I believe this gap up move, it can actually reach our first resistance level at 1.10. But that given that the RSI over here is reaching overbought, so we expect once it reach this resistance level around here, it may be going to make a new base somewhere around here before it could reach our second resistance, which is around 1.20. So that's it for the first chart. So the second chart that we have here is actually Thai Beverage. So we're actually making a sell call around here is because for primarily one big reason, because in the recent price over here is actually making a bearish pattern, which is what we call as a bearish engulfing pattern. And follow up from the bearish engulfing pattern, which was last Friday, in this pattern around here, it actually broke down below this blue line over here, which is the 30-day SMA. So this basically is a precursor to a more downward move, even though this morning is actually making a bullish move. But for me, in order for this stock to invalidate the bearish move, it actually has to at least break this body bearish engulfing body around here, which is around 54 cents, to invalidate the bearish move. If not, I feel like this green candle around here is just going to be a false breakout. So that's it from me, Thailand. Thank you.
Thanks, Amirul. Very
Yep.
enlightening as always. You can find his charts also in our daily newsletter today. Now, with that, I want to quickly draw your attention to something that we've been doing as a little bit of an experiment. As you know, at Maybank, we pay a lot of attention to sustainability and ESG. And we think that companies that invest in ESG and are far more transparent in what they do will actually outperform their peer stocks. And we put that to the test, looking at social responsibility, the S in the ESG. And basically the S, we look at how are they treating the internal stakeholders, specifically the employees, as well as the external stakeholders, which are their communities, with things like diversity, female representation in the board and in the workforce, and so on. And we tested this by using MIBG's own proprietary ESG scoring database. And we ranked the companies that score the highest to the lowest in terms of sustainability, social scores and social factors. We also ranked them by those with the most transparent and ambitious targets to improve their ESG footprints. And we overlaid that with our own buy calls so that we have stock fundamentals also coming through. And we actually came up with 6 names. So CSC Global, Comfort Delgro, DBS, Ames APAC REIT, Frasers Hospitality Trust, and Dynamac as scoring the highest after we did all these screenings. And then we kind of backtested this against MSCI Singapore index performance. And we see that these stocks actually have outperformed quite strongly on a 3-year basis, about 44%, and in a 1-year basis by around 15%. So I think there is some evidence to show that companies that are becoming more transparent, have better governance, and are doing more for the environment tend to outperform a lot better than companies that are not. And I think that gap will actually increase. So I think for investors, it's important to focus not just on the stock fundamentals and on PE and PB, but also a little bit on ESG scores going forward. Now, with that, let's have a look at our upcoming dates. We've got quite a few macro events coming up. FX reserves on the 7th, the all-important Singapore GDP number coming out on the 14th. We are already forecasting for Singapore to grow higher than the government's forecast at about 3.5% versus 3%, which is the upper end of the government. We also have results season starting with Parkway Life reporting on the 16th of October and Keppel DC reporting on the 18th. There's a lot of interest around the data centers, so do follow our coverage on that. Also, in terms of events, we've got a very special event coming up on the on the 16th of October, which is an exclusive investor night on Cetrium. I think the stock's up about another 3-4% today. Stock was up about 15% last week. We have the C-suite of Cetrium joining us. So this is an event that you can't afford to miss. So do speak to your salesperson or scan this QR code to get your place for this event. It's a very, very limited number of seats there. So do join us. And with that, that's all the time we have today. Thank you, as always, for joining us. Thank you always for your support, and have a profitable trading week, and see you next week.